Okay, so for today's session, it will be relatively short, mainly because we don't really have a very active market in the Asia for the last 2 weeks lah. And you can see that both Singapore and Hong Kong market are quite not really a lot of things to trade. The reason is, of course, is attributed to the coming Chinese New Year. Hence, there is not much movement. Most people, even the smart money, they don't want to be holding a lot of short-term position towards the holidays, the New Year holidays. So you can see most of them are reducing position, and also most of them are not entering any new positions lah. So as retail traders, right, we should follow the same, as in we should also those that are already TP'd, you can definitely cash out, and of course try to reframe yourself into getting into Hong Kong and Singapore market in the coming weeks, in the next week lah. So you can also see that recently majority of the trades that I posted in the trade setup, right? They are largely in the US market. This is entirely intentional because US market is still pretty much active. Hence, there's more focus towards US market side. And of course, there's only one SG counter that I post a trade setup lah. Hong Kong so far none. Because as I mentioned, we don't want to be entering new entries lah. At least until the Chinese New Year is over. So mostly, right, I do receive one particular very I would say good question that was posted on Patreon. Someone messaged there to say that um since I have mentioned that we should not be entering the market, right? Why whenever I post the trade setup, are these trade setup less successful? Is it more risky in nature? So I think that's a very good question that was to ask lah. And to answer that question, right? All the trade setup that I post, I will consider them the Nimbus trade setup. Simple. Most of Nimbus trade setup, they follow a specific certain criteria lah. So we have a list of criteria. All these criteria have to be met, and once they met, hence I will take the trade. So all these counters that you see here, right? If you study them carefully, they do follow a certain pattern. They must be able to, for example, the most easiest pattern that you can see is they break above the resistance. So why are most counter that I post breaking above the resistance? Is it because I take only breakout trades? I don't take any other kind of trade except breakout trades? Not necessarily, because under Nimbus Capital, right, we do have different kind of trade setup. And the thing is, in the first in January 2011, right? The first month of the year, we do have a very, very bullish month, and we can see that by majority of the counters hitting profits, and most counter that entered during the December of 2020, we do see most of them hitting our profit target, most of them going up as well. So there are a lot of counters that are not present here because these are only 2021 counters. Those that I posted on 2020, right? There are a lot of them that are hitting profit. So when a market is bullish, right, it does make sense to take breakout trades because the momentum is there. And more setup are on the breakout structure rather than at the support structure. Mainly because if everything is going upwards, nothing is going down, right? Then it is perfectly reasonable to assume that we don't really have much trades that are, say, rebounding from the support, or some kind of a bottom picking trade. So in a bullish market, right, the common you will have to ask yourself, since everything is bullish, why on earth would you want to go and buy at a support or go and buy something that is there's a downtrend when everything else has been going up and up? So let's say as you are in the Patreon and you just started to join my channel, as we move towards maybe the next 1 year, the next 2 year, when the market structure change, you might start to see other trade setup where I will be buying a lot more counters as support rather than breakout trade. Maybe because due to the market structure, there are not much breakout trade anymore. Hence, the structure, the trade setup will slowly shift to other kind of trade setup that we have lah. But even right now, most of the setup we are going for is breakout trade setup lah. For me to take a certain trade, certain criteria must be met before I take the trade. So in a way, as long as all these criteria are met, right, I consider them as equally on an equal scale lah. There's no such thing as some trade are more successful, some trade are less successful, because at the point of entry, there's no way for us to predict the future. There is no way for us, oh, I think this one can go up more, that one can maybe doesn't go up as much. There's no way for us or anyone to predict that. Hence, all of my trades, they have equal level of so-called potential in a way to say. So if you look at the charts and data, right, so you can actually access this page, access this tab, you can see that there are four charts. One is the total trade outcome and total trade by market. So total trade outcome is referring to all the trade that was posted on Patreon. You can see that we are doing still relatively okay. We have 50. We have about slightly more than half that are still open. They are still running. Running means it has not hit the stop loss, or it has not hit the TP yet. It is still like out in the open. We have, unfortunately, one trade we have taken stop loss already, which is here, MMG. And we have about 43.8% that we have hit our TP lah. Hence taken profit already. So if you look at the bottom two chart, the Nimbus trade outcome is referring to trades that I personally take. So you can see that the percentage is somewhat very similar, very similar. So as I have repeatedly mentioned, it doesn't really matter what trade I take. You don't have to care. Overall, over a long period of time, over 100 trades, 200 trades, right? This two percentage will comes out to be equal. All you have to do on your part is to follow the trade plan, which is do not exit before the stop loss, or do not exit before it hits your TP. Do not prematurely cut your loss and run and chase another counter. And on the right side, this is the two new charts that I have set up. It is trade by market. So what is the percentage of trade that is Hong Kong, US, or Singapore dollar? And what is the percentage of the trades that I take are Hong Kong, US, or Singapore? So as you can see, the US now cover a majority portion, largely due to recently I have been posting US stuff more often since the Asian market are starting to quiet down. Hence, there is more US stock. And this is also mainly to cater to a lot of folks who are requesting they want more US counter, or a lot of people come and tell me they only trade US. So it is more to cater to these people also lah. But what you will see here is that personally, I am more biased towards Singapore market. This is mainly due to one very simple reason. I can monitor Singapore market. I cannot monitor US market because I'm sleeping. So if you are trading US most of the time, right, you do need to make sure that you can take your profit or cut your loss during market hour. So if you are unable to put up a limit order or a stop loss order or TP order, right, more often than not, if you trade US, you are going to realize that you are going to miss your TP, and the next day everything become red, which is a very common scenario. We have seen that in BlackBerry. We have seen that in a few other counter that I posted, where trader missed the TP and the next day they are red and they are wondering, oh, what should I do? What should I do? I missed the TP and now everything is in a red. So if you are those that love to trade US, make sure that you are able to exit when it is appropriate. So on my part, I am not going to be responsible for you to ensure that you are able to input your TP order or exit order lah. Mainly because if you chose to trade the US market, this is the risk that you are taking, and this is the kind of contingency plan that you need to make sure that you have. Hence, no matter what, although I post US trade a lot, you will realize that I am more active in the Singapore market. And does this mean that Singapore stock are much more potential, much more successful? Not really, not really. As I mentioned, all my trade setup has equal amount of potential because they follow the same criteria lah. Okay, so let's look at the fund flow analysis. So if you look at the fund flow analysis, right, we can see the blue line lah. We are mainly interested in the blue line only. We are not interested in the red line because blue line is the smart money. It is the institutional. So you can see that for the past 2 weeks, for the past 2 to 3 weeks, excuse me, the institutional is going back into the negative zone. But even on the cumulative side, right, you can see that. Yeah, let me put the drawing tools. For the institutional side, you can even see that it is sort of flattening out here. It is like going to go back down like that. But does this mean that everything is bearish now? You should start shorting lah, what lah? Actually, no. Because as I said, this movement, I would say it is more likely due to the Chinese New Year than anything else. So all you have to do is just stay low for a while, stay quiet for a while. You don't need to prematurely short everything. But once we see some kind of recovery return, right, you will start to see me posting more and more SG counters and Hong Kong counters. That's when we want to start to ride the trend again. So as a trader, right, it is extremely important to know when to stay out of the market, when to stay out of the market, and when to participate in the market. If the condition is not good and you die want to trade, most of the time you are going to get your capital stuck inside counter that don't really have a good potential. But perhaps it doesn't meet all the trade setup criteria, but you die want to enter because you must trade for who know what reason. And if you do that, right, you are going to get your capital stuck in all these counter. And when market recovers, when things start to run up, right, because you have all those capital stuck there, right, you don't have enough money to buy all these counters that are starting to recover. And what you end up doing is you end up exiting all those counters that you are stuck. More often than not, you are going to incur loss. Not only incur loss, more importantly, you are going to incur a lot of commission charges, especially if you are on a very if you are on a brokerage with very high brokerage fee, right? Those with $25 minimum commission, even the $10 minimum commission. If you keep entering into market at this non-optimal time, right? All these losses and all these charges will add up, and they will contribute to loss that you could have avoided lah. So in a way, all these small losses tends to add up, and yeah, and if you look at it in the big picture, right, you will have better off not trading during this kind of quiet moment lah. So with that said, right, since next week is Chinese New Year already, so I would not be posting any Hong Kong or Singapore trade setup at all, but there will still be scanner being posted. So if you all still want to go ahead and trade the market by yourself, you can still look at the scanner to see if there are any potential counter or not. I mean, even in the last week, even though the market is relatively silent, you can see that there were a few potential counters that are running up, and these counters are of course I'll go through later lah. So let's roughly look at the index first. So for STI, right, you can see that last 2 weeks was quite bearish, everything red. But as we move towards Chinese New Year, things start to flatten out already. And you can see that this level is actually quite a crucial level, mainly because previously, right, we have a resistance here, then it break out of the resistance. Now it is sort of becoming a support. So it is like a resistance turn support. So the next support is somewhere around 2800. So until this 2800 is broken, right, where we were sort of like a lower low, until we see this, right, I am not bearish in the market at all, in Singapore market at all. It can even come down all the way here. It can even come down all the way here and like sideways a bit. I would not be bearish until this 2800 is like broken decisively. Then I will consider the market to be bearish, and we will be able to sort of assume that this is the lower high lah. And when we reach this stage, right, then I might be posting short setup, because there were question whether do I only go long position, like do I short at the market at all? And the answer to that is yes, I do short the market, but shorting is a very risky business. I'm sure you all understand the risk based on what happened to GameStop and some of other counters that gonna short squeeze. So short is not something that I take very lightly, and a lot of things goes into my setup before I decide to short. So what we can do for the coming week is as simple as just staying out of the Singapore market. But like I said, there were quite a lot of counters that were actually doing not bad. For example, we have MSC. So MSC actually shows up on scanner sometime here. Shows up on scanner sometime here, is doing quite well, going up. But of course, if you look at this counter, right, it seems like very illiquid. Not only is very illiquid, it does have a very high spread also. So I tend to stay away from counters with liquidity issue and have a very high spread. So hence this trade setup was not posted. But of course, if you enjoy this kind of counters, right, you can definitely go ahead and plan out a trade for yourself lah. And the next counter is of course Saring Tech. I think Saring Tech was one of the I would say the star counter for last week. It actually went up a lot on Friday, actually just on Friday itself. Previously the all the other days it were pretty much down, but Friday itself it does went up quite substantially lah. So in a way it does create some kind of a support level here at around 550. So if you want to trade, right, so this candle, a lot of you might think that it went up too fast already lah, cannot chase lah, wait for retrace or what. But actually if you want to chase, you can chase this counter. But the question of whether you should chase or not is how much are you willing to risk, and where is acceptable level to place your stop loss. So the stop loss that I will place for this counter, if I were to trade, but I'm not going to trade lah, but if you do decide to trade it, you can place your stop loss below 50 cent, anywhere below 50 cent, probably around 485, like that. 485 would be a good level. So you can see that the current price to 485 is not actually, it's not very narrow. It's actually quite wide. It's about 23% down. So are you able to risk this 23% in share price? Meaning you have to calculate how much are you willing to lose when price go from here to here. Once you calculate how much you are willing to lose, you can actually work out your lot size. You can actually work out how many lots that you can buy, and you can place the trade, and you are pretty much okay lah. Since you already know, okay, I'm willing to lose this much, so it doesn't really matter where the price go already. You just enter and you just let it be. So more often than not, right, what you will see is that maybe price might retrace a bit, but it shouldn't hit your stop loss and it will start to recover. So this is one counter that you can definitely trade for the next week if you want. But I would think that since next week is a short trading week, right, this counter will probably remain quiet lah. And after the Chinese New Year, then it might start to move again. But it's all up to you whether you want to trade this or not. And nextly, Food Empire also has been going up extremely well. So Food Empire, for those who remember, are on my Facebook. For those who are on my Facebook before I started Patreon, right? Maybe last year, September, July, August, I don't know. The first trade setup for Food Empire came here, and the stop loss was probably around here. So if you manage to hold through all this period, don't exit at your stop loss. You probably catch this whole stretch already, and this whole stretch is about 43%, 43%. But of course, you probably held for like I would say 176 days, which is close to about 4 months lah. So I mean there is a sort of give and take lah. And of course when I entered here, I definitely wouldn't have predicted or know that it will go up like this. And I also have no idea that it will be stuck so long. So we don't know all this. This is unknown. This is unknown. This is unknown. But what I know is my stop loss is here. As long as I don't exit when the stop loss is not hit, whatever comes my way, right, I will able to get it. So it's my trade setup is that simple lah. And of course, the next counter, this one is on Patreon. If you go and dig a bit back, right, sometime last year, you will notice this setup also. I think it came out. I'm not sure when already. Probably here. Probably around here. Probably around here. I think then you will be stuck a while for this duration lah. But if you are able to hold through it, you will be definitely rewarded here. In no tech. And for the coming week, this one is a very strong movement here. If you wish to enter, your stop loss should be somewhere around here, 585 like that, 585. So same thing as Saring Tech, right? If you look at the distance from the current price to the stop loss is about 18%, which is much narrower compared to Saring Tech. So actually, if you compare both chart or Saring Tech and Innotech, right? Actually, Innotech is a much better chart compared to Saring Tech. Why? Mainly because number one, the entry to stop loss isn't so wide. So you can definitely enter more shares, or you can definitely risk lesser compared to Saring Tech. And the thing is, this is a much better chart because it's in uptrend. Whereas if you look at Saring Tech, it's actually downtrend. It's actually downtrend. So why does uptrend and downtrend very is very important? Because if something is going up during a downtrend, right, at some point there will be a lot of people who are stuck at the top previously, right? All these people, right? Most likely majority of them, they might still be holding. They hold. Then once they notice that price start to recover really, right, they will start to sell. So it is very, very easy for a downtrend counter to just suddenly U-turn back and go all the way down. So for the case of uptrend counter, such scenario are much more unlikely compared to downtrend counter lah. So given a similar kind of setup, right, I will definitely choose a uptrend counter compared to a downtrend counter. But of course, if you have a lot of capital, right, you can go for both. Next one was Raffles Medical. Raffles Medical a bit not as good as the other two, so it's really up to you. Perhaps you prefer medical counter. I don't know, or I mean, if you look at it in terms of the chart structure, right? This chart structure isn't really as good compared to Innotech, and it is much more expensive than Innotech also. Because if you look at Innotech, right, is okay lah, about somewhere around the same price, 80 cent. The other one is around 90 cent. Of course, another advantage that Saring Tech have over the other two is it is slightly more cheaper lah, at 60 cents like that. Yeah, so but anyway, you will see that this has a different trade setup structure compared to the other two, because we are buying at the retrace, whereas the other two we are buying at the breakout. So as I said, these are some of the scenario where my scanner or my Nimbus trade setup, we do take other form of trades when it shows lah. We do have other kind of trade setup aside from the breakout trades lah. It is just that currently there are not many counters that have this kind of trade setup. So Raffles Medical, you can definitely buy at this support. If you buy at this support, the stop loss should be somewhere around 875 like that, around 875. So if you look at the current price, check the distance, 950 to 875 is only 7%. So what this counter have advantage over the other two counter is it is very narrow. Your entry to stop loss is very narrow, meaning you can actually risk a lot lesser here compared to the other two, because the other two are much wider stop loss lah. Hence, you have three scenario. You have three different kind of charts. One is Sarintech. Um, it is very bullish. Chart structure here is very bullish. It rebound from support. Everything is very bullish. And the thing is, this one it has a long term downtrend lah, but short term and mid term it is going up, and it is around 60 cents. Then the other one, you have Innotech, short term uptrend, mid term uptrend, long term also uptrend, but it has a slightly wider stop loss, and it is also slightly expensive at 70 cents like that. But for Reverse Medical, you have a chart pattern that is short term going upwards, but long term wise not very good. However, it does have a bigger advantage in that the stop loss is very nearby. The safest stop loss is very nearby the entry price lah. Hence, you can risk a lot lesser, or you can enter more shares, and if it goes up, right, you can definitely profit much more lah, because you are able to buy more shares. So when I look at what to trade, right, so you have three potential here. Within this three potential, right, you work out which one is best for you. When I say best for you, it is in terms of how far are they from the stop loss. Are they uptrend or downtrend? How expensive is the share price? Because if the share price is like 90 cents, right, maybe too expensive for you already, you can't buy already. Or it might be better if you go for Sarintech, which is the cheapest of the three. So these are the things that you need to keep in mind when you want to sort of enter a trade setup that I posted. It is not simply just blindly Zor post setup already, I'm gonna enter. No, it's not like that. You have to keep all these little things in mind and make that decision. And okay, so these are the three counters that were quite good that I saw. And of course, the most successful counter recently, I would say, is of course iFast. And iFast, if you notice, last week although I did not post the trade setup publicly, last webinar I do mention that iFast is one of the better moving. I would say the only counter in Singapore that was doing quite well lah. But if you last week Friday was here. But if you enter on Monday, right, actually there's not much movement going on also lah, because the biggest move happened on Monday itself. So there isn't really much opportunity for you to take this jump here also, unless you manage to catch the trade here lah. So in a counter, in a scenario like this, right, everything is going up, right? A lot of people tend to, hey, how I fast, how why how like can trade or not. So normally for me, I see this kind too fast and too furious really, right? Even for my own personal trade setup, it doesn't meet any of my setup criteria, so I usually just let it go. I don't bother about it. Just because something is going up, a lot of people are shouting, doesn't mean that you must trade it. You don't need to trade things that are flying off every day, because if it doesn't meet your trading system and trading criteria, you simply do not trade it. Because if you trade it, it is something out of the blue you have not encountered before. You don't know how it is going to be like, and most likely is that you will not be able to handle it. So this pretty much for the Singapore counter. I don't really have anything for the Hong Kong side lah. We will take a look at Hong Kong more closely when the New Year is over. I do believe after New Year things will start to pick up lah. But if you look at the HSI, right, although it is slightly flat, it is not as bad as it doesn't look as bad as the Singapore market. Actually, Singapore market is not really bad at all. It's just that Hong Kong doesn't retrace so much, and these few days we have recovered a bit lah. So it will probably be quite quiet for the coming week. So just let it be. But if you look at the HST, the Lion OCBC Hong Kong Tech, right? We have recovered tremendously, and you can see that the first trade call came out around here lah, somewhere here like that. So you should have gotten your TP ready. Even if you miss the TP, right, we are back into the high area lah. So if let's say in the coming week, if this shoot up above the resistance, right, you will expect to see me make another trade setup again. So if I make another trade setup, you are still holding the first trade, you decide to hold it, then it's good for you. You can enter that second trade setup, and that is how you sort of compound multiple trade and end up having a big win lah. Okay. So let's go over to the US market. US market actually doing quite okay, quite well. It has rebounded, and I think now the S&P is reaching like all times high again. So for last week, most of the US counters should see some kind of some greens lah, some profit coming in lah. And recently I posted a few trade setup also. Let's just quickly go through the trade setup. Of course, let's look back at some of the counters that was sent previous ago lah. Okay, so firstly, US Steel it is still open. So I think the stop loss is somewhere around here, if I'm not wrong. Let's take a look at it. Where it is. US Steel, I think it was way back. Here, US Steel. Okay, so you can see that the stop loss is not hit yet. And there's a reason why the price is sort of hovering there, and perhaps it can even recover back quite nicely. The stop loss is not hit yet. So if you enter somewhere here, so the entry mate was here and the stop loss was here. And if price fall until this and you are panicking, you like losing a lot of money, then the issue is you obviously entered more than you can handle lah. You obviously have entered a lot more than you can handle. So your issue here is not that the trade setup is wrong or this or that, but rather your lot sizing is wrong. So always look back at yourself to see what you can change. Whenever you encounter a losing trade or what, right, you don't blame the trade setup, you don't blame the market, because the trade setup is always consistent. I will always take this setup. If it hit the loss, then very simple, you simply just take the loss. But if it doesn't hit the loss and you started to panic, you don't know what to do, right? Then maybe you should look at yourself what you are doing wrong. And more often than not, right, it is most of the time trader overtrade lah. Trader overtrade, as in for example, when I give this trade, right, it is very easy to get distracted. For example, I give this trade setup here, right? Then a lot of people are, wow, everything bullish go lah. Or some more Zor give the trade setup also confirm win lah. Then end up they don't even look at the stop loss. They just anyhow enter, and what happened is when price does retrace, right, and they are sort of in a loss on don't know what to do lah. Especially when before price retrace, right, it actually went up a bit. It's just that it didn't hit the stop loss, and they were like in profit, very happy. Then after that, everything become red, then very red. So when trader face this, right, they will say that, oh, should they have taken profit here? If you taken profit here, right, what you did is that you just taken a bit of profit, and if you keep doing this for all the trade setup, right, you are not going to be profitable. You are going to make a loss because your risk reward ratio will be all wrong really. So you either hold until the stop loss is hit, or you hold until the TP is hit. There is no midway lah. So US still okay. Next we have this one, Bausch Health company. So this one doing relatively well from the entry, and it's going up lah, although slowly. So this one haven't reached TP yet, so just let it be. Don't have to bother too much about it. Johnson Electric is a Hong Kong counter. Barely almost hit the TP. I can tell you, I'm personally in this trade. You can see here, Johnson Electric. Where is it? Where's Johnson Electric? Are there? Johnson Electric. You can see this tick here. This tick me. I am in the trade. So I'm actually in the trade. And when price hit here right, I was like, nope, it haven't touched the TP. I'm not going to TP. I'm still holding lah. So currently I'm still holding this counter lah. Next one. Okay. This one. Life tech sign for Hong Kong. Same thing. Price seems to be going down, but haven't hit the stop loss yet. Where's the stop loss? 九天 Singapore ONG Johnson H Netflix MMG Ryan Park Silver Capital Life Science Tech here. Okay, so this one still haven't hit the stop loss yet. In fact, it triggered a second entry. So I actually entered more here. So I entered a bit there and I entered a bit more here. So when everything start to recover, right? When everything start to recover, those that just enter here and scared to enter here, right? You will need to wait for price to recover above your buy price, then you start to profit. But because I managed to buy a bit here, right? My average buy price is somewhere in the middle. So as long as it recover here, I am in the profit already lah. So this one haven't hit stop loss also. No reason to panic. Just holding, very simple. Overstock. So overstock. Same thing. The entry was here, retrace a bit, and now it is recovering back up. Netflix also same thing. Entry was here. It was going back to close the gap there. My second entry was trigger. I'm still holding Netflix. I'm personally in the trade as well. So I don't see any reason to exit until things become more bullish. Then I'll just see where the counter take me lah. Okay, same thing for Johnson J2 Global. Entry was here, retrace a bit, and then now we are recovering already. Oceanus is a Singapore counter. Okay, Cytodyne is a OTC counter. So the trade setup was listed as risky for a reason, mainly because it is a OTC counter. The spread is very, very wide. So if you are unfamiliar with OTC counter, try to stay away. So there's a reason why I put there risky, mainly because if it's a penny counter, OTC counter, counter trend trade, I will tend to put the risky tag there. Next one, Codexis. This one's still doing relatively okay. If you enter here, right? If you enter here, there's nothing to worry about all this price movement here. So what you need to know is that you cannot expect me to put a trade setup and then next day everything shoot up straight away. Those kind of situation, it does happen, but about 15% of the time, not all the time. So what you are going to encounter most of the time is that price shoot up and then it retrace a bit and then it will continue to go up, retrace a bit, continue to go up, and it will keep doing like that. So your job as a trader is that when it retrace, right, make sure that your stop loss is good enough that you are not stopped out by this retrace. Hence, all my stop loss are put at a very, very strategic level to sort of make sure you don't get flush out by this kind of price movement. So all you need to do is just make sure that you work out the correct lot sizing and you hold through the trade. And of course, the two latest stock are PayPal doing very, very well. It gap up on the earning here. So the entry was somewhere here lah. So we are still sort of sideways there, and hopefully we'll be able to see a much higher price going forward. And of course, the last one is advanced drainage system. So price actually went up quite okay, but towards the end of the session start to come down. So does this mean it is a bearish candle? You go and short, or you start to sort of alamak, pin bar ready lah, bearish ready lah, I exit first lah before hit the stop loss. And what you will see here is that in an uptrend counter, right, bearish candle doesn't really have much impact. So if you sort of if you kind of like short here, if you short here, you'll probably die already. If you short here on this very big engulfing candle, you will die here already. you will probably get stop out this whole stretch. And if you think that this is a very bearish candle or you want to short here, right, it is of higher probability that things might retrace a bit before going up even further lah. So why does all these bearish candle doesn't really have much impact? Mainly because it is uptrend. It is that simple. It is really that simple. In an uptrend, all bearish candle doesn't really have a big impact because there will always be someone who is willing to buy at the retrace. Hence, the vice versa is also true. In a downtrend, bullish candle doesn't really have much impact because when price go up a bit, right, everyone want to sell down already. That's why if you are counter trend trading, right, candlestick doesn't really work because one day you have a big engulfing candle and then you read somewhere someone teach you that engulfing candle mean can short lah this lah that lah, but in reality, right, it is not that simple. I mean, in reality it is that simple, but you have to think a bit lah. Since it is a uptrend, right, your this engulfing candle is of not much impact lah. But if you look at a downtrend counter, for example, Sembcorp Marine, if you look at a downtrend counter such as Sembcorp Marine, right? All your engulfing candle is very good, very good, very good. Everything start going all the way down. Even your all this red counter, all this red candle, engulfing candle here, they tend to go all the way down. Whereas the opposite is not true. In a downtrend, all your bullish candle, they doesn't mean a thing. Price will continue to go down. Okay. So I know most of you will probably learn from a lot of website, read here, read there. You will say that, oh, chart come down, chart is going downtrend. But once you see a pin bar or once you see an engulfing candle, you can buy, it will turn up. It's wrong. No. This only work if you are following the trend. The trend as in you have a very uptrend. Then during retrace, you have a pin bar here. Maybe you can buy that. It will go up because it's an uptrend. But in a downtrend, you buy the pin bar here, it go up a bit, it will continue to go down. So very, very important to follow the trend. Okay, so that's actually the end of this webinar lah. So we are coming to about almost 1 hour or so lah. But just to emphasize again, next week is Chinese New Year, so I will not be posting any trade setup except for maybe occasional 1 or 2 US counter. So next weekend there will be no webinar because Chinese New Year. I mean, I think it's good to take some time off and yeah, and just spend time with your family and go and play some mahjong lah. I personally will be taking the time off to go and do some visiting and some trade reflection also. Okay, so advance happy Chinese New Year ahead, and yeah, for the next week just stay out of the market. Thanks everyone and have a good night.